Hello everyone, thank you so much for watching. My name is John Newfer with Velocity Mortgage, and today we are going to be discussing the FlexPerm loan. So let's get started. So first thing you guys are going to want to know is Velocity has several programs. We have about 4 listed on our rate sheets. So you have the Credit Quick Fix loan, the ARV Pro loan, the Fast 50 loan, and then finally the Flex Perm. So whenever you're pricing a loan out, you're going to be given these 4 choices, but today we're going to be discussing the Flex Perm loan. Now, what about the Flex Perm loan? What's unique about the Flex Perm loan compared to all the other loans? Well, this is pretty much it. It is long-term money. So basically what that means is we are providing one of 2 options to our borrowers through the Flex Perm, and that is either the 30-year fixed rate loan, it's fully amortized over 30, or the 3-year ARM loan, which is fully amortized as well. So both long-term options for the most part, and you're going to be given the option to select which one you want to sell the client in the product pricing tool at generatevelocity.com. So just remember, there is a selection, whether that's the 3-year ARM or the 30-year fixed. Those are the 2 options we're given on FlexPerm. Now with the FlexPerm, there are several categories that you can choose from. So first category would be 1 to 4 investment properties. So this loan does include this category, whether it's an SFR, a condo, a duplex, triplex, fourplex, the FlexPerm covers it. FlexPerm also covers the multifamily as well as mixed use category. So that includes anything that's 5+ units or mixed use. And our definition of mixed use is any subject property that is actively being used as both commercial purpose as well as residential. And a common example would be like retail downstairs and residential upstairs. And the third category is commercial properties. So the Flex Perm loan covers all categories here: single family, multifamily, mixed use, and commercial. And with our commercial, we lend on retail, warehouse, office space, business condos, pretty much any type of commercial property, as long as it's not too special use. When we're talking special use, I mean like a bowling alley or like a or a school. Those things are a bit too special use for us. We're looking for collateral that is able to be leased out by multiple different types of tenants. The key is just making sure it can be stabilized. But either way, these are the 3 categories you can actually place someone under using the Flex Perm loan. Now, when it comes to the Flex Perm loan, we do have loan amount restrictions. So let's go over those loan amounts right now. So first off, SFR loans, so 1 to 4 investment properties. The minimum loan amount is $75,000 and the maximum loan amount is $2 million. However, if you have a deal on a 1 to 4 investment property and it's above $2 million, we will approve those on an exception basis. So basically you just have to run the scenario by us and we'll approve it upon us on an exception basis. And then when it comes to the multifamily, mixed use, and commercial properties, our minimum loan amount is $100,000. The maximum loan amount is $5 million. But of course, once again, if the loan amount is above $5 million, we will approve it on an exception basis. So just run the scenario by us and we'll take a look. Now moving into the next slide, we're going to go over the loan to values here. What are the loan to values on our long-term money, the Flex Perm? So just from the top, 75% loan to value on investment 1 to 4s, multifamily, and mixed use. So those are the 2 separate categories, right? 1 to 4 investments, multifamily, mixed use. Now when you jump into the commercial properties, we cap out at 70% loan to value. So if you have anything that's commercial, retail, warehouse, storage space, that's 70%. Now keep in mind, with both of these categories, all 3 categories, we will allow for an 80% combined loan to value. So that's a scenario where Velocity, let's just say Velocity lends 70% on a commercial property for a purchase, and the seller is willing to carry an additional 10%. That would bring the combined loan to value to 80%. Now let's jump into the FICO score requirements. So Velocity bases our FICO scores on the mid FICO. So that's basically looking at the 3 bureaus and which score is in the middle. So just keep that in mind. Now, if a borrower has 650 plus, The maximum LTVs is between 70 and 75%, obviously depending on what category of property it is. But you're going to need a 650 if you want to get the max LTVs with this loan product. Now, if the FICO score is below 650, let's say it's between 620 and 649, we will still do the loan. However, we're going to max out at a 50% loan to value. So keep in mind, we will still do the loan, obviously, if it's below 650. It's just the LTVs get cut down a little bit. And then finally, if the excuse me, if the FICO score is below 619, right, below 620 in this case, we will approve it on an exception basis, just based on that 50% loan to value. So bring the scenario to us. It's okay if his FICO score is a bit below 620. We'll consider still doing the loan just at a 50% loan to value. Now we're going to jump into how you get paid. This is the final slide of the presentation. And it's probably the most important part for a lot of our brokers and lender relationships who work with us. So you can earn up to 2 points on the yield spread. So if you're not familiar with yield spread, that just means you get paid by increasing the interest rate. You can build your points into the rate. Now you can earn up to 2 points there. And then you can also earn up to 5 points front-end origination. So you can charge up to 5 on the front. Those are points that get paid out at closing on the front end of the loan. Now, there is a caveat to all this. The maximum amount of points that we allow on the HUD is 5 points. So if you're going to be charging yield spread, you need to keep in mind the front-end origination points are going to change. For example, if you charge 1 point yield spread, the max front end that you could do would be 4 points. Because the max is 5 that you're allowed. And same with the instance if you maxed out your yield spread, which is 2 points, the most you could put on the front would be 3 points. So I hope this presentation helped you guys. I want to thank you so much for watching once again. My name's John Newfer. I'm a wholesale account executive here at Velocity Mortgage Capital. If you have any questions at all, feel free to get me at my office phone or my cell phone, and feel free to reach out. Thank you so much. Looking forward to doing a lot of business with you.